Alrighty, let's look at part 10. We look at call accounts. Introduction. A call deposit account allows the client easy access to their funds. Most banks require a minimum amount of 1,000 to open an account. Some other banks might say 750 or 500 rand or 1,500, but most banks require at least a minimum of 1,000 rand. There are other restrictions on these accounts, such as limits on amounts that can be withdrawn and deposit. They can maybe tell you you're not allowed to withdraw more than 500 rand or not deposit more than 1,000 rand at a time. Fees are levied on transactions at applicable rates, and interest is calculated daily. There is usually no administrative fee on this account, which makes it a very cheap option, cheap account. When you look at the features, access to funds. Funds can be accessed on demand, subject to bank clearance. Balances. Minimum balance as set out to be maintained on the account. The issue of statements. Statements are provided on request. Deposits and withdrawals. Cash deposits as well as cash withdrawals can be processed over the counter. Transfers. Transfer of funds is limited to the accounts in the account holder's name and can be conducted via the bank's transfer system or electronically through an online banking mechanism. The issue of access mechanisms. There's none available. The client can link this account to the transactional account and then transfer the funds to and from the account through a cell phone or telephone and internet banking. So you won't get access to mechanisms to that account, but you can link that account to another account, transfer the money to and from via the other account. Charges. Monthly service fees and bank charges, including cash handling fees, are levied on the account. Interest is calculated daily at a rate determined by the bank from time to time, and changes in interest rates are effective immediately. So what are the benefits of this account? Access to funds. Clients have convenient access to funds through the branch network. Please note, there are minimum and maximum withdrawals and deposit limits that apply to all these transactions. Okay, so you must at least not go under the minimum or above the maximum withdrawal and deposit limits. Online banking. All banking can be conducted online. Transaction charges will be levied. It is a practical, convenient, and cost-effective way of transacting. Telephone and cell phone banking options are also available. The capital amount guaranteed. Low risk investment option. So you see, once again, if the capital amount is guaranteed, it's low risk. If there's not guaranteed, it's high risk. Interest is earned at a tiered rate, which means the higher the balance in the account, the higher the amount of interest earned. Loans. Funds can be used as security against loans with the bank's consent. What is the product rules? Opening of account. Clients must be satisfied that the product is suitable and meets their needs before signing the agreement. Clients need to ensure that all tax matters are referred to a specialist tax consultant. Clients need to be able to provide all related identification and proof of residential documents as required by law. Access to the account. Funds can be accessed at any time. Use of the account. Authorized signatories may be nominated by the account holder to operate on the account, but the client will be liable for all transactions conducted by the authorized signatory. For fees and charges, the bank may charge service fees and charges for transactions as stipulated in the current pricing guide. The bank may vary interest rates and fees from time to time, but once again, if they vary the interest rates, notification of the changes must be provided in a reasonable time. So if it's your account, you want to know when these changes, what they are. Okay. And they can do that by publishing new pricing guides in the media or written notification. So it doesn't matter which account. If there's changes, you need to know. Interest is calculated daily at a rate determined by the bank from time to time, and changes in interest rates are effective immediately. Statements are available on request, so they don't get monthly statements. Close of the accounts. Accounts will be closed if they become inactive or fall below the minimum balance requirement, but prior notice will be given to the account holder. In the case of fraud, or if the law compels the bank, the account will be closed. When you look at tax, income tax certificates detailing the interest earned are available on request, and income tax information is also furnished to SARS. Confidentiality. All clients' information will be treated as confidential and shall not be disclosed unless, and here we go again, it is in the public's interest, the Guptas. The bank is legally compelled to disclose by a court letter. The client has given consent to disclose. Is it before or after? Can you remember? Shout a little bit louder. I cannot hear. Yes, you are all right. Before. Nice one. Information on the status and conduct of the account can be provided to all divisions of the bank, the Credit Bureau, South African Revenue Services, SARS, and similar agencies. All right, now we look at notice deposit accounts. Introduction. But this word says it all, notice. You must give a notice. Okay. There are various types of notice deposit accounts, like a 32-day account, a 60-day, 88-day. Some banks offer even more extended periods, such as 185 days. These accounts require that the client gives the bank notice. You see? Hence, it's called a notice deposit account. Applicable days. For instance, on the 32 days, you give 32 days notice to receive the funds. On 60 days, you give 60 days notice. On 88 days, 88 days notice, and so on. The client can put a notice on the whole amount or on a portion of the funds that might be required. So the client can decide how much he wants, or does he want the full, he or she the full amount. The funds will only be released on expiry of the notice period. Interest on the funds is calculated daily and a minimum balance is required. The interest earned on notice deposits is usually higher than on call accounts. What are the features? Not the future of the account. Hopefully the future of the account is good. Access to funds. Funds can be accessed after giving notice in writing. You must always give notice in writing, not over the telephone, because then you've got nothing on paper to prove it. Should there be a complaint or a problem or an issue. Balances. Minimum opening deposit as stipulated. Minimum balance requirement as set out must be maintained on the account. The issue of statements. Statements are provided on request. Deposits and withdrawals. Cash deposits or transfers into the account can be processed at any time. Issue of access mechanisms, that is not available, none available. Charges, no transaction fees are levied on this account. Interest is calculated daily and changes to interest rates are effective immediately. Alternatively, after the notice period expired. So clients can choose to have the interest paid to another account or reinvested. Withdrawals during the notice period are not allowed, but under certain circumstances will be considered subject to an early withdrawal penalty fee. Benefits, the capital amount guaranteed, low risk investment. You see, once you see that word guarantee, it's a low risk. Because high risk will not have guarantee. Interest is earned at a tiered rate, which means the higher the balance in the account, the higher the amount of interest earned. Loans, funds can be used as security against loans with the bank's consent. Now, what is the product rules? Opening of the account. The clients must be satisfied that the product is suitable and meets their needs before signing the agreement. Clients need to ensure that all tax matters are referred to a specialist tax consultant. Clients need to be able to provide all related identification and proof of residential documents as required by law. Access to the account. Funds can be accessed by providing a written notice as per the notice requirements of the account in writing. Use of the account. Authorized signatories may be nominated by the account holder to operate on the account, and the client will be liable for all transactions conducted by the authorized signatory. Fees and charges. There are no transactional fees on this account. The bank may vary interest rates and fees from time to time. Notification of changes must be provided in a reasonable time and using appropriate means like publishing new pricing guide in the media or written notification. Penalty fees are charged for withdrawals made before the expiry of the notice period. And the penalty fee can affect the capital amount. Statements. Statements are available on request. The closing of the accounts will be closed if they become inactive or fall below the minimum balance requirement, and prior notice will be given to the account holder. In the case of fraud, or if the law compels the bank, the account will be closed as well. Tax. Income tax certificates detailing interest earned are available on request, and income tax information is furnished to SARS. Alright, so in the case of, just go to this bullet, in the case of fraud, or if the law compels the bank, in other words, maybe it was money laundering, drug money, that can also tell the bank to close the account, and the account will be closed. Confidentiality. All clients' information will be treated as confidential and shall not be disclosed. And once again, here we go. I think you should know this out of your head by now. Unless it's in the public's interest, the bank is legally compelled to close. The client has given the consent, or the credit bureau or SARS or similar agencies request that information, then it must be disclosed to them. And then if you looked at the fixed deposit account, so the previous one was a notice, now we look at fixed. A fixed deposit is a single deposit that is invested for a fixed period at a guaranteed fixed rate of interest. So everything is fixed. It's a fixed deposit as a single deposit that is invested for a fixed period at a guaranteed fixed rate of interest. Fixed, and fixed. There are various fixed deposits with maturity dates ranging from 1 month to 60 months. Various banks offer flexible fixed deposits. Oh, see, that's another one. Now you get a flexible fixed deposit option. It's just very strange. Fixed is fixed. Now you get the flexible fixed, where limited withdrawals can be made subject to a limited percentage of the available balance. Example of a specialized flexible fixed deposit. So, a fixed deposit of 10,000 Rand, fixed for 12 months. The client can make a maximum of 2 withdrawals on this account within the 12 months, subject to the amount of the 2 withdrawals not being more than 20% of the total deposit. In other words, 20% of 10,000 Rand is 2,000. So both the deposits of the withdrawals together, if you add them up together, cannot be more than 2,000 Rand. That's the limit. It means the client can withdraw either 1,000 twice during the period, or an amount of 2,000 once during the period, or 500 Rand and then 1,500. Or 700 and then 1,300. But if you add them together, 2,000 is the limit. There are fixed deposits where the interest rate is linked to the prime rate. It means the rate will impact on the earning potential of the investment as the prime rate fluctuates. The features, the benefits, and the rules listed below pertain to a general standard fixed deposit. So what are the features? Access to funds. Withdrawals before the maturity date are not allowed. The minimum balance requirement as set out must be maintained on the account. The issue of statements. Statements are provided on request and not monthly. Deposits and withdrawals. No deposits, withdrawals, or transfers can be made into this account before the maturity date. Issue of access mechanisms. There's none available. Charges. No transaction fees are levied on this account. What are interest? Interest can be paid on maturity, or monthly, or quarterly, or biannually. In other words, biannually, for those of you who might not know what this word means, biannually means every 6 months. In other words, twice a year. Into an account as stipulated by the client, but cannot be reinvested into the account. Interest can be added to the capital at maturity. So yeah, interest rates remain fixed for the entire period of the investment. So here you cannot, if you get the interest, you cannot reinvest your interest. You must keep it. You can only reinvest at the end of the maturity. Withdrawals before maturity are not allowed, but under certain circumstances will be considered subject to an early withdrawal penalty fee. So they will tell you certain rules that you cannot draw the money before that time, etc. But if you do want to withdraw, they will allow it, but then you'll pay a penalty for it. And maybe that penalty will eat up all your interest. Then it's not really worth it unless you really need it. Benefits, the capital amount guaranteed, which means guarantee low risk investment option. The interest rate remains fixed for the entire period of the investment and will not be affected by fluctuations. The higher the amount invested, the the higher the rate of interest paid. And loans, funds can be used as security against loans with the bank's consent. What are the product rules? Opening of an account, clients must be satisfied that the product is suitable and meets their needs before signing the agreement. Clients need to ensure that all tax matters are referred to a specialist tax consultant. Clients need to be able to provide all related identification and proof of residential documents as required by law. Access to the account, funds cannot be accessed before maturity. But withdrawals before maturity will be considered under certain circumstances subject to penalty fees. Use of the account, the client must provide the bank with written instructions regarding the placement of funds at maturity. If the bank does not receive instructions, the funds will be reinvested for the same term at the current interest rate. Fees and charges, there are no transactional fees on this account, and penalty fees are charged for withdrawals made before maturity. The penalty fee can affect the capital amount. You see, it can make a difference whether it was worth it or not. When you look at statements, statements are available on request, not monthly. Close of account in the case of fraud, or if the law compels the bank for FICA reasons, money laundering, account will be closed. Tax. Income tax certificates detailing the interest earned are available on request, and income tax information is furnished to SARS. Once again, confidentiality. Here we go again. All clients' information will be treated as confidential and shall not be disclosed unless, let's sing that song, it is in the public's interest to disclose. The bank is legally compelled to disclose, the client has given consent to disclose, or provided to all banks if the credit bureau or SARS or any other similar agencies request information, then it must be disclosed. And that is the end of part 10. You see, a lot of the things are similar, just here and there that they change. That is why I suggest if you know all the things that's similar, learn them, then you know, okay, these accounts are similar and these accounts is the different ones. Try to make your notes like that when you study, or highlights or whatever. Then you can know that. But yeah, you need to know that for the exam and also for advising clients. Best of luck.